Good morning. What Trump's marijuana policy shift means for the legal hemp industry as well as for commercial real estate. Well, President Donald Trump has issued an executive order directing the reclassification of marijuana from a Schedule 1 drug to a Schedule 3. While this action does not federally legalize marijuana, it represents one of the most consequential federal drug policy shifts in decades, and it has direct implications for the legal hemp industry as well as commercial real estate. Now, for commercial property owners and investors, this move signals a potential inflection point in lending access, leasing risk, zoning flexibility, and tenant demand across retail, industrial, and specialized use real estate. So, Schedule 3, why this matters. Moving marijuana to Schedule 3 places it alongside substances recognized as having accepted medical use. While interstate commerce and federal legalization remain off the table, rescheduling materially changes how the industry is treated from a tax as well as a regulatory standpoint. And most importantly, Schedule 3 eliminates the application of IRS Section 280E, which has long prevented cannabis operators from deducting ordinary business expenses such as rent, payroll, utilities, and insurance. And the immediate impact is tax relief and stronger tenants. Now, under Section 280E, many cannabis operators paid effective tax rates exceeding 70%. With rescheduling, operators revert closer to the standard 21% corporate rate. And industry research estimates that cannabis companies paid more than $2.3 billion in excess federal taxes in 2024 alone. And removing that burden significantly improves the tenant's profitability, their credit worthiness because they have more money to pay their bills, and their ability to sign longer term leases, as well as for them to finance capital reinvestment into their facilities and expansion. Now, for landlords, this translates into lower default risk and a more stable tenant base. So let's take a look at some of the commercial real estate implications. One is you'll see retail leasing expansion, and major operators such as Cresco Labs, Curaleaf, and TrueLeaf already operate hundreds of dispensaries nationwide. And improved margins and reduced regulatory stigma can also accelerate new retail site selection, conversion of underutilized strip centers, and re-tenanting of formerly non-bankable spaces. Now, as legal risk perception declines, more landlords, particularly those with institutional debt, may be willing to lease to cannabis tenants now. Two is industrial and flex-based demand. So beyond retail, rescheduling benefits cultivation, processing, testing, and distribution facilities. And these uses are going to favor industrial warehouses, flex and industrial campuses, also allow for specialized HVAC and power intensive buildings to be of more use. And for hemp operators in particular, already federally legal under the 2018 Farm Bill, this policy shift further legitimizes adjacent cannabis infrastructure while increasing investor appetite for specialized industrial assets. Three is lending in capital markets, a slow but meaningful shift. Now, while rescheduling alone does not force banks to lend, it opens the door for clearer guidance from the Treasury and the Justice Departments. And until then, many traditional lenders are likely to remain cautious. That said, the direction of travel is clear. There will be more private credit participation. You'll see improved underwriting confidence. And you could see potential future bank entry into these markets. And once banks fully engage, cap rates, valuations, and transaction volume could reset meaningfully. So let's look at some zoning and municipal considerations. And municipal zoning restrictions, such as distance requirements from schools or churches, will remain locally enforced. However, legal experts, some jurisdictions to revisit policies or revisit their restrictive policies now that marijuana is no longer categorized alongside heroin at the federal level. Now, this is going to create opportunities for adaptive reuse projects, rezoning plays, and early mover landlord advantages for those who expand their presence. But likely we'll see some hemp industry spillover effects. And the legal hemp industry stands to benefit indirectly through normalized banking relationships, potentially shared infrastructure investments, as well as expanded research and product development. And for commercial real estate investors, hemp processing, CBD manufacturing, and related logistics facilities may see increased institutional interest. And let's look at the industry response. So, trade groups such as the National Cannabis Industry Association have called the move a foundational reform. And operators, including Verano Holdings, describe it as a necessary step forward toward normalized capital access, medical research expansion, and long term industry stability. And here's what CRE investors should watch next. Treasury, as well as the DOJ, are likely going to offer some banking guidance, and there will likely be state level zoning changes, and you'll likely see institutional lender policy shifts, most likely to see sale and leaseback activity in the space, as well as industrial redevelopment demand. And the bottom line for commercial real estate is this: Trump's marijuana rescheduling order does not flip a switch overnight, but it meaningfully de-risks cannabis and hemp tenants. And for commercial real estate investors, this is not a cultural issue. It's a capital markets and tenant credit story. And as tax burdens fall and financing pathways slowly open, cannabis adjacent real estate could move from fringe to the mainstream, creating both opportunity and competition for well located assets. That, my friends, is it for the day. Please visit my website, Houston Real Estate Brokerage, to get a hold of me, and look forward to talking more. Take care.